Chat. Chat. What's good, chat? Dun, 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 dun. Back to back. Finna get it going, chat. Lord knows that I'm a. It's gonna be a bang out. Long live bang out. Tribulation and trial, snake the handshake. From the bunk to the streets, thug life ain't dead, believe me. In war with the system. The turtle race continues. Mm-mm. The turtle race. The turtle race. Alright, chat. Something new. I want to talk to y'all about what I'm eyeing this week. Why is this on there? What I'm eyeing this week as far as my potential trade setup. You know what I'm saying? First things first, we got to give a shout out. Happy birthday to America, man. Gotta love America. If you don't, get the fuck out the country. But if you're willing and able to learn this skill of trading, chat, I'm telling you, it's going to change your life. Let's talk about a couple of reviews over the trades that happened this past week. And if you were really paying attention to the overall market structure, how you could have really benefited in all of this. Like, it was absolutely crazy. Banger trades all fucking week, especially on yesterday. Huge dump in the market. We was already prepared for that because price went back into a good fair value, man. First things first, man, always understand that when it comes to trading, price only goes from fair value to liquidity. That's it. And if you're able to understand the market structure as a whole, what it really looks like to have a real liquidity sweep, what it really looks like to have higher highs, higher lows for bullish market, and lower lows and lower highs for bearish market, you can conquer this entire trading scheme, this entire trading game without putting in little to no effort at all. I'm trying to tell you, it's a game changer. But I'm no one to teach. I'm just someone that likes to share what I be seeing, you know what I'm saying, in the market. So overall, I'm gonna tell you exactly why sales was the answer in all of this. The reason why is because price swept higher time frame liquidity right here. This is a sweep with a displacement, and that displacement allowed it to break under this last low, right? Push under this low and kept displacing, but this strong displacement was able to sweep these buyers. You gotta look at it like it's an army. This wick right here activated this army of buyers. So that means because these army of buyers are activated, it should have been strong enough to carry on the trend upward because we've been in an uptrend for so long. But because these buyers were not strong enough to activate them or strong enough to push price even higher, sellers instead took over more yardage. So this says that sellers are now in control on a macro sense, right? So what we always want to look for, because we now know that sellers are in control, we want to look for what was left behind. So it's kind of like if you go into the grocery store and, you know what I'm saying, you on your way and you kind of think like, oh shit, I left my wallet at home. That's what fair value is. Fair value is like, oh shit, I left my ID or my wallet or my bank card or whatever you want to call it. That gives us the opportunity to see where is fair value in all of this. And honestly, you could have used this little volume imbalance. Me, I honestly was looking at this bearish volume imbalance right here. Let me cut that back now, right back on. When I dream, right? So basically what this says is this was nothing but sellers all up in here. Price did not deliver. The algorithm did not deliver price efficiently, so it's nothing but sellers. Buyers had no chance to kind of get right. Right. So because we made a new low with sellers being in control, it's like, no, I gotta go back and give buyers the opportunity to kind of fill in this void, right? Which is what they started to do when they started to trade back up in this area. Now, if you were looking at this volume imbalance, which I think I honestly was, if I'm being honest, because it provided better support over here. You want to see price get back in here on a macro scale, right? So on a 4 hour, it gets back in this area. Then on that 1 hour, once it gets back in that area, you want to see pretty much the same thing, man. Liquidity sweep up top, sellers take back control, leaving that 1 hour bearish imbalance. Get back into this zone over here. It does the exact same thing. So the reason why I'm speaking on this is like once price got into this area and it broke below the lows, the sellers get back into control. What you wanted to kind of look for was where was that area where let me see, what am I trying to say? How did I find my area? Scared of werewolves, vampires. Yeah, right here on the 4 hour. Where was that area where sellers left the buyers in the dust? You want to see price get back into this area and then turn back bearish. So the easy trade this week for anyone was start of the week on that Monday, that Tuesday, really that Tuesday. You wanted to see price do the exact same thing, man. Sweep its own liquidity, break below the lows where the sellers take control, because below here, this is where buyers are at this low. So that means once this wick hit these buyers and activated, these buyers should have been strong enough to push the price higher. That's if the price wants to go higher. But because buyers were not strong enough to push it higher and instead sellers took over more ground, that lets us know we're looking for where's that area that sellers took over on that 5 minute chart. Where was that area that the sellers took over? You see what I'm saying? That left the buyers behind. And because we know overall in the higher time frame trend is bearish, we looking for an opportunity to target higher time frame liquidity, because price only goes from fair value to liquidity. So now I know on my 5 minute it left this area behind. So now I'm looking at my 1 minute for my entry. Now how you snipe your entries on a 1 minute, that's where the skill set come into play, right? Because on this 1 minute, it looks like a ton of chop, but there's two ways you could have done it. Number one, the simplest way is you could have just put your entry in on that 5 minute bearish fair value gap right in the center of here. Stop loss above these highs. But then you'll be looking at what is this? It's actually not a big range. It's like 60 points. So that's the easiest way to have done that, which is what we did. But if you weren't able to kind of catch that, right, and instead you see prices kind of doing all this goobity gop, you got to always remember market structure. That's why I say if you understand market structure, you're going to be able to go really, 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 really far in this space, because we know that our 4 hour is bearish. We know that our 1 hour was bearish. Our 5 minute just turned bearish with this displacement, and this is that 5 minute bearish for value gap. If you aren't able to understand price and liquidity and what is not price, displacements, breaking structure, anything, and what it's doing in this gobbledygook, all you're looking for is just a market structure shift, right? For the 1 minute to turn back bearish. And how do you do that? You tracking those lows. You want to make sure that those lows get activated, and then price continues lower. So this is a good example where this is a low, right? This is an army of buyers, but buyers get activated and push price up. So that means the 1 minute has not turned bearish yet. So that this now becomes the new low, right? This high made this low. So we tracking that low, right? This high made this low. So we tracking that low, that swing low, not equal low. You know what I'm saying? You got to understand what a swing is. And then this candle activate these buyers. So just because this candle closed here, that doesn't necessarily mean that price is now bearish. We need to get confirmation first. It activate these buyers, but I also want to see price make a lower high and then push down even further. You know what I'm saying? So if you weren't able to get in on a fair value gap, because price never reached back into this 1 minute fair value gap right here. You see what I'm saying? So there are people that didn't even, you know what I'm saying, get a chance if they had been waiting to get filled. But instead, after the buyers get activated and then price closed here, you could have simply just taken your market structure entry, right? As soon as this candle closed, that's your their entry here with the stop loss above the highs. And again, because we know that our 4 hour is bearish, our 1 hour is bearish, our 5 minute is bearish, that's where you kind of now want to zoom out and look at that higher time frame liquidity, because price goes from fair value to liquidity. Most people would have targeted here, and this is a great place to take some off the table. And by some off the table, I'm talking like, you know what I'm saying, take some of those contracts. But in reality, what I would have immediately done, why am I struggling to, because this is a trade that I was eyeing for so long, I wouldn't even have been looking at this little bit of liquidity, because if you zoom out to the 15 minute, this is just the displacement liquidity. This isn't even like the liquidity that is really chasing. It's really chasing liquidity that's further down here. You know what I'm saying? That's an easy 12 to 1. And then if you are able to hold on long enough, right? You got the wherewithal to hold on long enough. If you have a live account, not a prop firm, then you know what I'm saying, your entry would have been at 6 p.m. You'd have been able to get full take profit about 5 o'clock the next day. So 24 hours later, you'd have made a 26, 27 on one trade on, right? Because you understand market structure. And even better risk to reward returns if you're able to get in on that fair value gap, like I showed before. That would have turned into like a 31, 32. So that's the first trade that we saw this week, right? So that's what that was. Next trade, you got to remember, now price is delivered on liquidity. Once price delivers on liquidity, it's going back to a fair value, right? So market structure, where is my fair value on a higher time frame to target to get a re-entry? My 1 hour left, this 1 hour bearish fair value gap, right? Coupled with this order block here, you know what I'm saying? Order, breaker block, whatever. Coupled with this area of support and resistance. So I know that this is a good area to target if price wanted to return into this area, which is exactly what we get. So after price delivers on your liquidity, what you want to do is at the bottom, you could trade the correction, right? How do we trade that correction? We want to see price turn back bullish. And it does. Where are we? Right here. Right, market structure shift on the 5 minute. What do we get? This is a high. Made this high. Right, this high made this low made that swing high. This is my last swing high. This candle activates these sellers. This candle activated these sellers. So if price was still bearish, it would have activated these sellers, made a lower high, and continued lower. But instead, it activated these sellers, held strong, and then stayed above these sellers. You see what I'm saying? So if you were to take your entry based on market structure again, that's just a market structure shift. So that would have been your entry around this area. Boom, stop loss below the lows. Once your 1 minute turn bearish and then back bullish as well. I'm not gonna go that deep into detail, but once this area gets activated, not once but also twice, and holds above, you want to look back into your fair value gap. My rock star. What's in his zone? Around this area, you want your 1 minute to do the exact same, man. Tracking your highs, tracking your lows. Market structure shift. This was my last swing high. This last swing high made this swing high. This swing high made this swing high here. Let me erase this last black line. Made this swing high right here. All in one candle, these sellers got activated. Right? Price moved up, activated these sellers, and then moved up even higher. So now our 1 minute is now bullish. Which now it then leaves behind fair value, because again, price is only looking for fair value for entries, which is what you would have got right around this little zone here. And sometimes the fair value gap doesn't look the cleanest on like a 1 minute chart. I don't always use a 1 minute. And I mean, if you're not even paying attention, like you would have easily missed this. It's super tiny, but it's really important not to miss that, because that's your fair value. That's where you want your point of interest is, to be able to take this type of trade with your stop loss below the lows. right? You could have put your lows here, or if you just want to be safe, kind of put your lows there, just in case you don't want to try to get wicked out. Zoom back out, and remember, we have our area of interest. We have our area of interest on that higher time frame. We're interested into this area. Okay, we are interested in this area for this trade. So now I know I want my price to reach back into this fair value. Why will it reach back into this fair value? Because the overall trend is bearish. Overall trend is bearish. It's already delivered on the liquidity, but once it delivers on the liquidity, it's going to seek fair value to deliver on more liquidity. My overall trend is bearish, and I've already shown you that on the 1 hour and the 4 hour on the 4 hour time frame. So if I'm going to take a trade on this correction after it delivers on liquidity, once price turns bullish, I know it's going back to this fair value. That's another 20-to-1 trade, easy. You know what I'm saying? Now, question: what do you do once price gets back into this fair value? And this is the third and final trade. I'm gonna go into the trade I'm looking into. You know what I'm saying? Going for next week. Third and final trade. That happened yesterday. Banger of a trade. Once it reaches into fair value, just ticked it. Literally just wicked that joint because it wasn't nothing but like 50 to, it was like a 40-point spread. $80, right, for one contract. It ain't got to do too much dancing around here, but it just wicked. So still, you just want to see that market structure shift. This is my last low. This is that low that made this high. So this is my swing low. This candle here activated these buyers, right? Push price up, made a lower high, and then still closed below. Well, still pushed much further down here. So I know this is a big push. A lot of people be like, yo, I missed a lot of this, but that's okay. You just want those confirmations, because now after price left this big push, it still left a little order block up in here if you're paying attention. You just want to see price react into these zones, because it could have reached up into here. You really don't want to see it push back this high, only because then that would be another market structure shift back bullish, right? This is a swing high. This is a high. You don't want price to break structure. You're overall bearish. So if you want price to hold in a direction that you want it to go, but the way that I was able to catch this trade actually much higher up into this area was because I monitored it a little bit on the smaller time frame. All night. I monitored it a little bit on a smaller time frame. I ain't gonna lie, man. I was watching it more on the 1, because that 5 minute kind of gave like horrible. I ain't gonna say horrible with that price delivery, but I already knew, you know what I'm saying, that 5 minute gave that displacement. So I jumped down to the 1. I saw these areas of interest on that 1 minute, and then when my 1 minute did the exact same, where this was my swing low, that was my swing low. Price activated those buyers and then displaced lower. It gave me entry, and you guys probably don't even see this. This is what I'm talking about. Like, you actually have to zoom in, and I be saying this to my wife. You actually have to zoom in, because what do we have in here? This is a volume imbalance. This counts as fair value, right? Entry, literally. And people be like, yo, nah, there's no way, bro. The price will deliver. The price will deliver, and it always will go from a fair value to liquidity. So, boom. Great. It don't get no better entry than that. It just doesn't, right? Then you zoom back out. Why do we zoom back out? Because we know we're seeking liquidity, and we know we're bearish on the overall higher time frame. And also, we got this good turtle soup. This is just all liquidity lined up, just waiting on one big wick to just come take all this liquidity out, right? So our goal was here. This was an easy 10-1, but it just was one of those days where structure continued to hold. Remember I said structure held on that 5 minute really well, right? Swing low, price activated those sellers and continued even lower. So this was another area of interest for reentry, and because of that, that's where you leave your runners and you be comfortable enough to zoom back out on a higher time frame, and you look to see, okay, where's my next liquidity that price can deliver to. Now, it didn't deliver to the 1 hour liquidity, but if you zoom out to look at the 15, you'll be able to see that price had actually delivered more on, I gotta keep the family fed. Price delivered on this 15-minute liquidity right here. Swept that liquidity, then displaced higher. You see what I'm saying? So easy targets. Easy target. Now I would have been mad if my target was here and I'm waiting on it and then the price reversed all the way up, but that's not a problem because I understand that price will come back into this area of interest that I just explained to y'all. So those are the 3 trades from this past weekend, or this past week, that each delivered 10 of ones at a minimum, 10 of ones. Okay. Tombstone by the river that will carry me. So let's talk about this final thing, and that's what the hell I'm looking forward to going into this week. All right, since price delivered on liquidity, I'm looking at 2 things. Number one, I want price to show me what it's gonna do into this 1 hour bearish fair value gap. Okay, reason why I want to see it out of here is because if price reaches up into this area, then that'll be a break of structure, and I don't want price to break structure, reach this high, break structure, because then I think we'll see higher prices. If I'm short, if I'm bearish, because I know my 4 hour is still bearish, my 1 hour just flipped bearish, I want my 5 minute to get into this zone and then turn back bearish as well. So now looking at the 5 minute where it's at here, since it's just gotten into this area, this is another line of just free liquidity. All it takes is just one quick wick to go from 914 down to 787, just 130 points, just 130 point drop, just one quick bow, and all this liquidity where people set their stop losses and their sell stops, that they're out of the market, they're gone. So it's easy for the market to go ahead and manipulate these people if they want, if they want higher prices. It's not just going to push up. But the reason why I'm turning bearish going into Monday or going into Sunday is because now market structure people, all I wanted to see was my 5 minute start to match my higher time frame structure. Higher highs, higher lows. Where's my low? Right? Starting back here, low, swing low, swing low, swing low, swing low, swing low, right? Swing low. This swing low activates these buyers. If price is still bullish, it will activate these buyers and push higher. But what it would do, it activate the buyers and then makes activate the buyers and then make a lower low, right? So I know that there's a fair value gap somewhere in this region that I can be interested in taking, or taking a look into a potential entry, right? As you can see, price is respecting this same level, okay? And a little bit of the 5 minute kind of actually turned back bullish, kind of halfway through here, where it bought up, activated sellers, and then it continued to close higher. So that's something that we monitoring. However, I'm still not really tripping off that, just because every time it makes a bullish fair value gap, every time I make a bullish fair value gap, it kind of disrespects it a little bit. So I'm still leaning more bearish for now. However, going into Sunday, it could get one final sweep before the push down. But because I know that this is around my area of interest, that's what I'm interested in. And plus, the 1 minute actually looks a little cleaner now that we start to uncondense a lot of this stuff. So still, market structure, where's my lows? This is my swing low, right? This swing low, this swing low makes this swing low activate the buyers and continues to make lower lows. This here, my fair value gap. Yo, the demand was good, G. This here was my fair value gap, and if you missed it, this 1 minute bing right up in here and immediately push right back down. This shows you just how strong sellers really are. Price jump right back into this fair value, and so now I'm hoping that price comes back into it. That's why I already have this kind of like right there. I'm hoping price kind of reaches back into the zone, and I put my stops like right here, somewhere above the highs. It don't matter. Get that adjusted, but then zoom back out to my high time frame liquidity. All of this liquidity, I still believe we can get. Why? Because my 4 hours bearish, 1 hour is bearish, and my 5 minute turn bearish. Price is going to seek liquidity. Another thing about liquidity is that the algorithm does not like to leave equal lows, or semi equal lows. All this liquidity down here, these are relatively close to one another. Okay, relatively close, with the 4 hour being bearish, 1 hour being bearish. Between here to here, This is a 100-point difference. It takes nothing for the price to just flush right through that. That's just 100 points. That's just 100 points. So I can imagine that we'll get one good little bing all the way through. Now, once it gets around here, though, I'm not gonna lie. If it doesn't come with like full force string, there will be a lot of like dancing around, and that dancing around will kind of look like this. Because these are all buyers. Once it hits this, it's just gonna buy up. Once it hit that, it's just gonna buy up. It's just gonna get a push. It's gonna get a push from all of this, right? But because there was no swings around here, that's why this fell off a cliff. There was no extra additional liquidity to stop this from just falling off a cliff. But down here, you're gonna get a little bit more of a tap dance, kind of going crazy, right? So same deal with that 5 minute. That 1 hour 5 minute bearish now. The only stop on liquidity is around here. Let's see what it looks like on the 5. Don't stop. It never will. You know the ground won't stop. Yeah, there aren't many stops on the 5 minute. 15 has like 1, 2, 3, 4, 5, 6 stops. Yeah, we can definitely work our way down. May take a day, may take all day, take a day or two, whatever. But that's what I'm looking for, chat. I ain't gonna hold you guys up. That's all I want to talk about. Show you guys exactly what I'm looking at, what trades was missed by most people this past weekend or this past week. Huge opportunity in the market. My camera went out. Huge opportunity in the market. Oh well. Let's see. Battery is dead on the camera. That's all. But all right, chat. Appreciate it.